Back in the year 2008, the financial crisis wreaked havoc on the stock market. In fact, reports state that the S&P 500 lost 38.5% of its value in the depths of the Great Recession. However, there were a few stocks that showed remarkable resilience, and then the pandemic sent the US into its next recession in 2020. And again, a few stocks were able to show remarkable resilience. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the top 5 recession-proof stocks to hold forever. PepsiCo's origins trace back to 1898 when pharmacist Cal Braden produced Pepsi Cola and started providing the drink to the users. While Pepsi is not recognized for outstanding profits growth or stock price success, it stands out for its stable revenue stream. The food and beverages company is a member of the S&P 500 Dividend Aristocrats, firms that have grown their dividend distribution for 25 or more successive years. On July 15th, PepsiCo announced a 5% rise in its dividend payment to $1.075 per share or $4.30 for the entire year. That works out to an annualized payment of 2.7%, more than twice an S&P 500's typical 1.31% yield. The distribution of dividends is due September 30th to stockholders of record at the close of business on September 3rd. A solid profits record of success helps keep the payments flowing. A 74 earnings per share rating, part of the total performance rating, implies a 5-year compound earnings growth rate of 4%. Profit decreased 2% in 2019 and it was unchanged last year following 3 years of growth. Analysts forecast a 13% growth this year, followed by an 8% increase in 2022. And an SMR rating, sales plus profit margins plus return on equity, places Pepsi in the top 20% of all companies depending on those parameters. Last year's ROE of 54.5% is considerably over the necessary 17% minimum for growth companies. Sales increased by single digits the last 4 years. Wall Street anticipates a 7.2% growth this year and 4.5% the following. Pepsi stock is now valued at $168.58. Walmart is the world's biggest private sector employer and a retail powerhouse. For a large number of years, the Dow Jones stock was a major growth winner for investors. The introduction of Walmart Plus, the retail giant's answer to Amazon Prime, has speeded up the pressure on online titan Amazon.com. However, is Walmart stock a suitable investment at this time? Walmart generates enormous profits. In the fiscal year of 2021, it totaled $559 billion. Despite this, the company's scale is also a liability, as seen by sales growth of just 6.7%. For such a massive retailer, achieving significant growth is quite challenging. The bargain retailer was established by Sam Walton in 1969, but it isn't resting on its laurels. Walmart's.com online grocery sales are growing as a result of the company's outstanding success in e-commerce. The company's brick-and-mortar shops, though, still account for the bulk of its sales. Meanwhile, Amazon's Whole Foods supermarket chain gives the company real presence in the retail sector. High inflation prompted more consumers to seek out Walmart's discount rates, resulting in better than expected fiscal profitability for Walmart. Despite the 4.3% increase in sales, Walmart's profits per share climbed by 8.5% to $1.45. On both the top and bottom lines, it outperformed expectations. United States same-store sales grew by 9.2%, and e-commerce sales in the United States grew 8% year over year and 87% over the last 2 years. This giant of a supermarket chain also forecast a 5% increase in US profits at Walmart should rise by 16% in 2021 and by 5% in 2022 according to current forecasts. Walmart's shares are trading at $135.33 a share. The company's stock price has fluctuated significantly over the last several months. Investors may have a greater chance of getting into the stock at a cheaper price if the price moves in a certain direction. Does the present price of 3M, which stands at $159.54, accurately reflect the company's true value? If you examine 3M's outlook and value based on most current financial data, you can determine if any factors might cause a price change. How much is 3M? Investors, take heart. 3M is still a great value right now. What's more, the share price of 3M is theoretically fairly steady, which might suggest two things. First, it may take long for the share price to rise to its intrinsic value, and second, there may be fewer opportunities to purchase cheap in the future once it achieves that value. Because of its low beta, the stock is less volatile than the broader market. What type of growth will 3M have? For investors aiming for growth in their portfolio, the future outlook is a critical consideration when looking at a potential stock purchase. If you're going to buy a wonderful firm at a reasonable price, you should also take a look at its future projections. In the following years, 3M's profits growth is predicted to be in the teens, signaling a bright future. As a result, strong cash flow should be generated, resulting in increasing share value. At $182.86, Apple momentarily had a market capitalization of $3 trillion. That day, Apple stock hit an all-time high of $182.88 before reversing. On January 4th, Apple's shares once again hit the $3 trillion barriers. A record high of $182.94 was reached before the stock began to decline. In the weeks that followed, Apple's stock price fell, but it has just begun to rise again. The closing price of Apple shares on February 1st was $174.61. The $3 trillion mark is mostly symbolic, but it demonstrates that investors are positive about the prospects for Apple's share price. Apple will become the first business to have a market value of $2 trillion in August 2020. During Steve Jobs' reign, which began in 1997, the iMac, iPod, iTunes, iPhone, iPad, and the App Store were all introduced. The iPhone has been the most important factor in Apple's recent success. When the iPhone was released in 2007, it was a game changer that prompted years of rapid growth and a dedicated client base. This year's Christmas quarter brought in $123.9 billion in revenue for Apple. Analysts had predicted that Apple will profit $1.90 per share on $119 billion in sales this year. Apple's profits increased by 25%, while sales increased by 11% on a year-over-year basis. iPhone sales increased by 9% year-over-year to $71.6 billion in the third quarter of 2012. 58% of Apple's total income came from iPhone sales throughout the time. Apple's Mac computer sales grew by 25% to $10.9 billion in the first quarter. The iPad tablet business, on the other hand, was a disappointment, with sales sliding 14% to $7.2 billion. According to Apple, shortages of table-specific chips were especially noticeable in the December quarter. Shares of Apple are now selling at $168.64. The company predicted earnings of $3 billion to $3.5 billion for the single-shot vaccine. Sales were down just a little, while profits were up just a cent. Although J&J shares had been declining since the beginning of the month, the stock has not backed down. Pfizer and Moderna vaccinations were recommended by the Centers for Disease Control and Prevention over Johnson & Johnson vaccine. Individuals who are either unable or unwilling to undergo messenger RNA injections might potentially be given the Johnson & Johnson injection instead. J&J will separate its health segment into its new firm in the next 18 to 24 months, which is also in the works. J&J will be able to concentrate on items with a greater rate of growth as a result of this. The pharmaceutical and medical device industries will form the core of the Johnson & Johnson after the split. These divisions are estimated to generate $77 billion in sales by 2021. Johnson & Johnson made $93.78 billion in revenue in 2021, an increase of about 14%. Adjusted profits for the business rose 22% to $9.80 per share. It is expected that in 2022, Johnson & Johnson would earn between $10.40 and $10.60 per share, excluding certain things. That would be a 6.1% to 8.2% gain. COVID vaccine sales are expected to account for $3 billion to $3.5 billion of the company's $98.9 billion to $100.4 billion in revenues for the year. It is predicted that sales would climb by 5.5 to 7%. According to Johnson & Johnson stock experts, the company is expected to have an adjusted profit of $10.56 per share on revenues of $99.95 billion this year, representing increases of 7.8% and 6.6% respectively. Shares of Johnson & Johnson are now selling at $167.71. That's all for today's video, and thank you for watching it. So what do you think about these stocks? Let us know in the section below. And also smash that like button and follow us on Instagram and Pinterest, and we'll see you in our next video.